All right, Sonia, thanks a lot for that. And of course, standard disclaimer that these stocks are not buy recommendations, and the CNBC TV18 research team as such does not have any exposure to any of these stocks. But just about 7 minutes left for markets to close. So we have Mayuresh, Joshi and Amrish Palika joining us for closing chat. Sudarshan Sukhani is also back with us. Good afternoon, gentlemen. So, Sudarshan, first a technical check on the market. It looks like another of those doji days, right? I mean, it opened at a mark, it's ending there. In between, we saw big gyrations. What's that telling you about the overall texture of the market?
Yeah, what happens, Anuj, is that when we have these doji days inside a trading range, and we are seeing the contours of a trading range now, then the doji does not have much significance. Price movement inside a trading range is random, so the doji itself is created by random price movement. I would not put too much say emphasis on the pattern today. I think the same pattern, same kind of volatility is going to continue till the Nifty finally decides to focus on one level, 7800 or 8100.
Okay, Amrish, have you given up your bearish stance, or do you think there's some more to go for the bears in the month of September?
In fact, if you remember last Monday, after that fall, I had said the fall was overdone. Yeah. And after that we saw a decent bounce back towards the weekend.
But that was technical in nature. So
that was a technical bounce back, no doubt. But then I've been saying now for the last 1 week, since last Monday, that it's time to buy. Okay. It's the time to nibble in. Don't put all your money right away, because we are in a broad range of that 7,800 to 8,200. But I think the buying range is 7,800 to 8,000. In this range, one should be buying where we are right now. But at the same time, this pain could continue for the next couple of weeks. Stick to your prices, wait, just wait out and possibly buy. But do I rule out levels of 7,500 or 6,800 which people have been talking of? Because in this market you really can't rule out anything. So keep some cash for 7,500. But then at the same time, in case it comes to that you see those levels of 6,800 and 7,000, break your FDs and invest in the markets.
Okay, that is a strong call that you're taking. Break your FDs and invest once the market heads lower. But Mayuresh, the stock of the day and perhaps the stock of the year has been Lupin. It's up 4% today and up almost 40% this year. Is there more upside left in that name, you think?
Afternoon, Sonia. Again, I think strong performance by Lupin, and clearly I think from a risk-reward perspective, yes, a 4-5% upside cannot be ruled out. However, I think valuations are a tad bit on the higher side, 26 times on FY17 earnings. So it will be extremely selective when it comes to the pharma pack. So from the large cap name, Sun Pharma is something that we will still continue to prefer. Yes, it would have integration issues and remedial issues for the better part of FY16, but the markets are aware of these facts. So FY17 numbers will be far better. And similarly, in the mid-cap universe, I think Dishman just came out with numbers. Our take is that the kind of capex that Dishman had done in the past few years, the capex intensity should start reducing over the next few years, which means that the turnover ratios for the company should improve. They should start sweating their assets, which basically means that the ROCs should come to that 13% mark in our opinion over the next year and a half. And clearly the other business are stabilizing. So CRAM specifically on the Carbogen AMP6 business has a decent order book. The vitamin D business is expected to get ramped up to 300 odd crores with a 20% margin, and the oncology division is expected to post margins of 40 to 50%. So clearly I think Dishman, even at the current juncture or on declines, is something we'll prefer. But Lupin, again, as I mentioned earlier, I think valuation seeming on the higher side currently.
Okay, so Darshan, all the gainers this month have been pharma stocks, whether it's large caps, like Lupin, Sun Pharma, Dr. Reddy's, or whether it's mid caps like Divi's actually is still a large cap, but even other stocks like Ajanta Pharma. Anything that you like from taking a fresh positional call in terms of buying any of these stocks?
I think if you're a short-term trader, buying any of these at current levels would probably be justified if you want to hold a position for 3 months. But to be very specific, today there's a minor decline in Oro Pharma. Oro Pharma is an opportunity, and Sun Pharma, which is seeing small gains today, is probably getting ready for a much bigger move on the upside. So both these stocks, and generally the sector is a buy, but specifically I've given you 2.
Okay, well, the stock to really look at is Dishman Pharma. Just take a look at the intraday chart. in the last half an hour that stock has just flown away and is now up almost about 10% or 8% as we speak. Very good numbers is what the company announced earlier on. Net profit growth of 60%, total income growth of 10.5%. So this one has been a stellar move. Any thoughts on how to approach Dishman now?
In fact, I think I recommend this stock at levels of about 35-40, but then at levels of closer to 155-160, I saw that the earnings were not really consistent quarter on quarter, and I exited at that point of time. But surely I regret looking at the price.
You should have waited a bit longer, really. Okay, any more Dishmans in the offing?
Not really in the pharma space, but then in the infra space, I've been suggesting people to buy ILFS Transportation, and now with the sort of thoughts which the government has on the highway sector, I think this is one stock which can really fly going ahead. Again, stocks like KEC International, which I had recommended in the past, continue recommending that at this point of time. Among the larger ones, L&T and Reliance. Engineers India, which I recommended earlier, saw a good move. It's again back to the levels which I recommended. I think looking at the sort of flows which will be there from the hydrocarbon space, especially the OMCs, we have seen a decent order to Punj today. So similar sort of
Punj
orders.
is also a buy for you? Oh.
No, Punj is not a buy for me.
Okay.
But surely a stock like Engineers India is a buy. Absolutely.
All right, just about a minute left for market to close, and let's just do a quick recap. Well, the market started at 79.80 and is ending at 79.80. In between, it went above 8,000 and it also went to 79.50. It's been that kind of a day. In terms of individual stocks, pharma clearly was your sector of the day, especially in the second half. Big surge in names like Cipla that ended at day's high, 3.7% higher on Cipla in today's trade. Lupin, again 3.7% higher, and Dr. Reddy's 3% higher. So big gains in all these pharma names. Apart from that, BPCL looked good today, up 3% in trade. Commodities in general did well. GAIL was up 3%, Vedanta was up about close to 2%, Coal India was up about 2%. IT did well except Infosys. Infosys had an issue today. That stock was actually lower, but ex of Infosys, the IT sector did well. TCS, Wipro, HCL Tech, all these stocks were higher. What didn't do too well? BHEL, that was down about 3.5%. That stock has in fact lost quite a bit of ground, 8% lower this month. Apart from that, the pressure on the market came from along with Infosys, came from ICICI Bank and Reliance. So these three stocks were all lower by about 1 to 2%. You can add an HDFC as well to that list, down about 1%. So all in all, you'll have to say that it was a day in which not too many could have claimed victory, either the bulls or the bears, because the market ended where it started and not made too much of a move, but big moves in the mid caps on both directions.
Oh yes, Anuj, and the market clearly has its favorites and it's not willing to let them go. You know, you can see that in the pharma names. Look at Dishman Pharma, look at Divi's Laboratories, look at Ajanta Pharma. All those stocks in late trade zoomed about 6 to 10% and then you have a lot of your other stocks, non-index stocks that have given you big gains this year. Look at PI Industries, up about what, 40% this year. It's up almost about 6-7% today. PI Industries is the one I'm talking about. PC Jewelers is another one, gained about 80% this year, up a good amount today as well. Kansai Nerolac, the crude prices continue to fall globally and many of these paint companies are seeing big beneficiaries of that. Kansai Nerolac up about 5%. Godrej Properties, one of the cleaner balance sheets in the entire real estate space. Godrej Properties looking good. Muthoot Finance, Escorts, IDBI Bank were a couple of other stocks that did quite well today. So if you went out and hunted for opportunities, you would find them definitely. But overall, the mid-cap index was under pressure. So the index itself was down 0.6%. Over there you had names like DLF that were down about 4%, Ashok Leyland was down 2%, Adani Ports under pressure, Glenmark Pharma down, JP Associates, India Bulls Real Estate down, India Bulls Housing Finance down. So these are a list of stocks that were under pressure. But getting back to our chat with our guests, Mayuresh, we were talking about some of these pharma names, but what about some of the other stocks in the broader markets that have given you very good returns? So say something like a PI Industries, something like a Kansai Nerolac, a PC Jewelers. Any names that stand out for you where there's still some value left?
So clearly, Sonia, I think if you look at a bottom-up approach and in terms of valuations and expectations of how the economy will perform going forward, mid-cap cement is something that we still continue as a theme. Yes, I think the numbers will be muted and soft, at least for a couple of quarters. Realizations are expected to come lower even for Q2. But again, I think the offsetting effect of lower input prices will start playing on the margins of these companies. And if one really assumes that the economic cycle starts sooner than later in terms of how the capex activity pans out and the investment cycle kicking off as well, clearly these companies would be in a sweet spot because the utilization level generally for the industry at 70-75% should start inching up slowly and gradually, which would reflect in return ratios. So JK Cement, JK Lakshmi Cement is something we'll continue to prefer on declines. And clearly, I think out of the entire mid-cap basket, I think we're having a very stock-specific approach. So something like a Transport Corporation of India is something we continue to like on declines. I think it's got a very asset-light model. Clearly, I think the kind of numbers that the company is posting, we're expecting the XPS and supply chain solutions segment to do exceptionally better over the next couple of years. And with the kind of concentrated capex on these two segments, the margin should improve to 9% in our opinion, which should drive bottom line growth in excess of 30%. So something like a Transport Corporation on declines is also something we would prefer.
Okay. Sudarshan, ICICI Bank has now completed 30% correction, and anyway it was not an outperforming stock. Do you think it can correct more, or would you now go out and actually create long position in this stock?
That depends on the time frame. Can it correct more? And the answer is yes, it does appear so. I think banks are going to correct much more. So if you are a short-term trader, there is none. I mean, either you take say B flat or B on the short side. But if you are an investor, ICICI Bank has been underperforming in the recent weeks, and that is good reason to buy it. I am not so downbeat on this stock as some of my other associate friends are. I would be a buyer if in fact it's a choice for me if I am a long-term investor.
Okay, that's interesting. Yes, the ICICI Bank is at some really mouth-watering valuations at this point. Currently, the stock has corrected about 30%, okay, 22% this year already at about 278 rupees. But another stock in that same bracket could be Yes Bank, because Yes Bank is also down almost 15% for the year. What do you do with these two names, Amrish? Stay away or perhaps look into them now?
I won't be too bullish on both ICICI Bank as well as Yes Bank. Yes Bank has issues concerning the management and the promoters, and at the same time ICICI Bank I think is among the larger private sector banks where there is some concern as far as the asset quality is concerned, and I think because of that we have seen that underperformance. So it doesn't really make sense getting into these at this point of time when you have stocks like Axis and HDFC Bank or a Kotak. I think it's better to get into those than these.
Okay. Sudarshan, a word on Infosys as well?
Oh, I'm upbeat on Infosys. I'm upbeat on most IT stocks, and these minor blips on days on which a stock takes some rest are actually buying opportunities for both the sectors, IT and pharma.
Okay, fair enough. So Infosys could be a buying opportunity. Is that your view as well, Mayuresh, that one should perhaps look into some of these IT names too, not just the large caps but many of the mid cap stocks as well?
No, so clearly I think our bias has been towards the large cap IT names, and clearly if you go by numbers and if you just leave aside Q1, which also had a lot of visa and ancillary related issues related to wage hikes, one really must see beyond that. And what we're seeing is in terms of client mining activity, in terms of discretionary demand coming back specifically in the US markets, that's auguring well in terms of how the client wins are going through in dollar terms. So clearly our own take specifically for Infosys within the IT pack is a dollar and a rupee revenue growth of 11.2%. To be more precise, it's sitting on $5.2 billion of cash, which if it uses organically, that can add to a consolidated EPS going forward as well. And clearly two tailwinds which work in favor of Infosys. I think the kind of rupee depreciation that we've seen will clearly act as a huge support in terms of the EBIT margins going forward. And B, I think in terms of pure utilization levels, I think they've got a gap around 300 pips, and if they do that successfully over the next few quarters, you'll see the EBIT margins inching up from the 26 to 27% range that the management is talking about. So yes, I think both based on earnings outlook and valuations at the current juncture, Infosys seems pretty attractive to us.
Okay, Amrish, a word on some of these tired names. You've in the past not been too bullish on names like MRF, maybe even CEAT.
Especially CEAT.
Especially CEAT,
Yes.
the kind of surge that we have seen.
Right. I mean, my view still remains the same, that the retail prices still haven't started coming down. I think that will come down quite sharply. There is Chinese dumping happening. And clearly, I don't think there is much of a brand value when it comes to tires as far as the consumers are concerned, because generally consumers buy it once in 3 years. So I think that's going to start hitting them sooner than later. They have enjoyed the margin expansion because of the oil prices coming down sharply.
No, that might be turning.
I mean, in case that turns, in case oil moves up by even about $8 to $10, I think that is also negative for these. At the same time, I'm actually concerned about the retail prices coming down and dumping off from China. So I think because of which I feel that the best is already priced in. These negative surprises are not. So I think when they start hitting, possibly you could see a sharp cut. So even at these levels, I think, I mean, especially CEAT is a good sell.
Any thoughts on how to approach escorts? I remember you used to be bullish
Right.
on that stock many years ago. It's hit a fresh 52-week high today.
Right.
You would buy it?
I would hold it if I have. And at the same time, I mean, looking at the market conditions, whenever there's a down day, I think that's the day to, buy stocks like these.
Okay, well, that stock has seen a big move in the last 3 months, 3 to 4 months. Escorts has gone up almost about 50% odd. So dramatic comeback for that stock. But we thank all our guests for joining us and taking us through the last 1 hour. It's been a very range-bound day, you'd have to say. Yes, the markets have been down. So after the 2 good days we had on Thursday and Friday, there was no follow-through at all. But it's still been very range-bound. So nothing sort of a day today. Let's slip into a short break.